Welcome to TradeTheNBI.com. This is John. This report is for the 19th. Well, we broke out up into the 100% mark as expected for the ES. It was a little bit behind where the NASDAQ was. Kind of a lull Monday here where we're filling back some of that positive call volume, and that's going to just depress that option setup from the beginning. There's no real major news effect. I mean, everything is still progressing slowly compared to what the Trump administration wants. The investment numbers are fantastic. The irony of that is, by the time the effect of them is, Trump will have left office. So whoever the next president is going to benefit from all that massive investment into the U.S. The Doge stuff moving along. Courts are slowly approving, their ability to get in and look at things. And, the more they look, the more the disaster they're going to find. And will it get resolved? Well, too little, too late. That is really the ultimate question. From a current economic model, the way they see things, well, you can just keep spending forever. But doesn't quite work that way unless something else changes. From an NQ standpoint, you can see the dip down here, but still above 33. So that's what you're looking for. But there's that crossover DOC spread from cyan moving under, and so you move from that perfect buy situation to a bit more short interest weakness. Not so much from an MBI reading there, but you have a full reset of steel. As long as it's below zero, you're going to have the weakness. But as soon as it pops back above, that's your next up push. So that's the pivot we'll be watching for. The Fed, it's an interesting one. I mean, rates are obviously higher than they should be, but that should be drawing, investment in, but it does make it more difficult from a growth standpoint. So Fed is arbitrarily holding back, spurt in growth. It's their choice. You're not seeing anything from the inflation. We're still higher than we need to be, but it's not enough to really cause any kind of bump in inflation. Of course, that's all what they were expecting, and it's supposed to happen in this coming month. But it was supposed to happen last month and before that. And, this is where that tariff thing was just a joke. And much to do about nothing did improve the coffers. The U.S. borrowing numbers were far less than they had expected, and the receipts were up. So that's an interesting one. Euro bouncing off no real relative importance, and again, Eurozone is still in recession. So I don't know what they're talking about, but that's okay. From a gold view, a slight improvement off of the earlier weakness, and this is just that back and forth because there's still a heavy camp that believes that this inflation is coming and that it's a matter of just minutes before it takes place. So be on the lookout. Bitcoin made its high, sold off from that, and just classic profit taking within the modest up run that we've seen. Same thing here on ETH, and you can see the breakdown. Still not a whole lot of short activity within it, so it's just that natural fill back, so to speak, within it. We'd had this MBI white spike. We were expecting a move back to the 50. Of course, it came at a much higher level, but if you equate it back to when it took place, we're pretty close to where it actually took place at. Just a fraction lower, and you'd have filled it. But will it continue on? That's really going to be a question of whether there's an MBI weight spike here, and haven't seen it as yet. It's a complete reset from a DOC standpoint as far as midterm, long-term buyers. So the only thing holding it up right now is short-term buyers at this stage. So this could continue a little bit. You can see the dip below the red line. So plenty of selling, at least here in this pre-market state. And that can change because as all those call buyers bought in, they got ripped at the end of the day, and that's where we left off with, from the lows. It was right around the 59.25 range. Not that bad when you look at it from an overall move here intraday. You can see recovering from the fade off, and so it's a little bit shy at the 59.08 range of where things were, but that's all right. It's just going to be that ebb and flow. There's nothing major at this particular stage, so we just look for world events, see if something breaks. Obviously, nothing much came of the Russia-Ukrainian talks, but broadly speaking, there's nothing of major upset at this particular stage. So that'll be the market mover until the next set of data starts coming in middle of the week. So we'll wait for that. As always, though, anything relevant, I'll put it on the team chat. Have a good one. Trade well.